10 a.m. So welcome everyone to our webinar that we called the Triple Crown. Just by way of very brief introduction, a special thanks to Brock Ainsley. Brock Ainsley hired me in 1993 as a investment advisor with Midland Walwyn, and Brock and I share stories almost on a daily basis about investments and what's happening globally. And my name is Sherman Dahl, by the way, and I'm with Pretium Capital. And we came up with the idea if we could get some leading experts in the space to talk about what's happening globally from a macroeconomic level about the battery metal sector, that would be interesting. So just a real little special thank you to Brock Ainsley. He's based out of Kelowna, well-recognized name with CIBC World Markets. And certainly as we go forward, we always like to mention that, you know, when you are building a portfolio and you're looking at individual security selection, it's very important that you do have a qualified investment advisor. So we're not making any particular recommendations or investment advice on this call, but certainly, you know, make sure you conduct yourself accordingly when you're building your own investment portfolio. So really the theme that we talked about is building some awareness on what's happening globally in the battery metal markets, and perhaps after you've listened to our three keynote speakers or our panelists throughout the morning, which by the way, the goal of the Triple Crown is to do this all within an hour, and we're quite confident that we can. So you're going to hear from our panelists for the first 20 to 30 minutes. And then we're going to have a little bit of a question and answer. So we certainly encourage you to send question and answers because of the number of people that are on the call. We're not going to open up the lines, but certainly you can send us questions online. And I guess part of the goal is to take us from, you know, an overall level of awareness to building the knowledge of the battery metals sector, and also perhaps building some knowledges of some individual companies. And of course, you know, with us today on the call is, I'll just get the gentleman to wave, is Greg Bose from Northern Graphite. We also have Richard Williams on the call with us from Cornish Metals.
Morning.
Richard's in Vancouver. Greg is in Ottawa. And then of course, Tim Moody, who's the CEO of Pan Global, which is based out of Spain, and Tim's in Bristol, United Kingdom as we speak. So there's all your panelists, folks, and you can read their bios. I'm not going to go into a lot of detail. I mean, the whole point of today is to allow these panelists to speak about their experience. And so really the overall goal is to, number one, inform investors as to what is going on in the global battery metal market, and also inform investors about the companies that we sort of have selected at the Pretium Group that we think are sort of outstanding choices for your own portfolio. So part of the goal is to inform investors. The other part of the goal of today's call is to actually, you know, bring some spotlight or to tell the story of each individual company. And that's what your panelists are going to do today. So we're going to move quickly to that part of the presentation. And I guess I'm going to frame the question to our panelists is in sort of two parts, is the way I thought of it this morning, is what's really going on in terms of the macro level in the world of battery metals. And in particular, I guess the way I look at it is we're seeing a massive change that's being driven by, you know, the fact that we're changing our mode of transportation. And that has serious implications from a supply chain point of view. You know, we look back, you know, I sort of look back in history in 1908 when the Model T Ford came out. I mean, I think there was more people lined up for the Model T than there ever was for the Apple iPhone. And then you also look at, you know, the makings of J.D. Rockefeller over the years really came from the hydrocarbon market. And you can't help but realize or start to build an awareness, if you will, for the fact that this massive change in you know, the new petroleum, if I had a table of the periodic elements behind me, there's 6 or 7 elements that are really critically changed by this supply chain, this big massive change that's coming by. So the first question is going to be to get the panelists into the mode of talking about that change, because I can tell you that I'm really close do a lot of work with these companies, and they have a lot of experience in the different seminars they're going to, the places in their lives, and the fact that they're CEOs of companies that are at the leading front. So it's almost like Robert Friedland said, we've got this like asteroid coming towards Earth, and we're like the dinosaurs trying to figure out what do we do here when we've got this kind of a change coming up in our lifetime. So the first part of the question is, can each panelist please, give us a description of how they see the macro part? And then of course, we're going to ask each of the CEOs to talk about an introduction to their individual companies and how their commodity that they're focused on is relevant. Obviously, we're going to ask, we're going to lead off with Greg Bose, who's going to talk about Northern Graphite and clearly the graphite space. And then we're going to move to Tim Moody, who's going to talk about Pan Global and copper, which is going to be great. And then we're going to finish off with Richard Williams, who's going to talk about Cornish Metals and the very exciting prospects for tin. So there's your triple crown: copper, tin, and graphite. Doesn't get any better than that. So I'm going to turn it over real quickly to the panelists, and then we are going to have a little bit of a Q&A. So I got a couple of questions I'm going to ask the panelists that I haven't told them about in advance. And so we'll have a little bit of fun with that, and we'll kind of do it in reverse order. We'll ask a question of Richard, then we'll ask a question of Tim, and then we'll give the last question to Greg. And by then, I'm sure we'll see some questions coming in online. And if we can, we'll do our best to answer those on the call. We'll just see how everything rolls over the next 20, 30 minutes. I will say this, that, I'm always fully available. We'll send out a notice after the call to all the participants, what my email is and what my phone number. I'm always happy to chat about any of the companies that we're involved in. And you'll find that these CEOs, they're busy guys. They're traveling a lot internationally and so on, but, they're always available for more calls by appointment as well. So we're pretty accessible group, just not. I think it's going to be tough to open it up to question and answer on this webinar. So, with that, I don't think I have anything else to add, and I'm sure the gentleman will fill in all the gaps, and let's have some fun with this. So we're going to turn it over to our first panelist, where again, I think all the bios, we haven't gone in detail on the call, but they're available online on their corporate websites. And with that, I'm going to hand it over to Greg Bose from Northern Graphite.
Thank you, Sherman, and good morning, everyone, or good afternoon, everyone, depending on where you happen to be. For those of you that are not, don't know that much about the graphite side of the story, just very quickly, graphite is the largest component in a lithium-ion battery. In fact, Elon Musk said it should be called a nickel graphite battery. It requires the largest percentage increase of any. And surprise, surprise, it all comes from China with all the associated ESG and logistical issues. Normally junior companies have their hockey stick projections of demand. We don't have to do that. The automakers are doing it for us. In order for them to achieve their sales forecasts, multiple new mines are required in all of the battery minerals. So it's a very compelling supply-demand dynamic. And to quote J.B. Straubel, who is the co-founder of Tesla, the demand numbers are insane, and they really are. So what we are looking at, the EV story, we're looking at a revolution in the battery minerals that's going to be comparable to the commodity super cycle. Graphite has kind of been the poor cousin of the battery minerals because we've had excess production capacity from China, and prices have remained stubbornly low. But there's very strong evidence coming out over the last half of this year. Prices are increasing. Inventories are almost non-existent. So I think we're about to have an event in graphite pricing like we've already had in lithium a couple times. And this past week, there was a very good article by Reuters about battery makers grappling for graphite supply. So the graphite story is starting to make the mainstream press. One of the problems for investors is how do you play it? there's only one substantial public producing graphite company, and 20 or 25 advanced stage projects, mainly in Africa, sitting on the runway looking for money to build a project. And Northern Graphite has been one of them. But we just announced a transformational acquisition that is putting us at the front of the parade. We're buying 2 producing graphite mines from Imerys SA. That's a 4 billion euro company listed on the Paris Exchange that operates 100 mines in 30 different countries in industrial minerals. That transaction will make us the 3rd largest producer outside of China, the only North American graphite producer. We will have 2 large world-class development projects behind that, one in Namibia and our Bissett Creek project here in Canada, which Benchmark Minerals considers the highest margin graphite project in the world, including existing producers. All of those projects, the 2 we're acquiring plus Bissett Creek, have the highest quality graphite. They're located in politically stable jurisdictions and they're close to infrastructure. And we have a very good share structure and valuation. Right now, the shares are halted on the Toronto Stock Exchange pending approval and financing of this transaction. And the biggest question most people have is when will they start trading again? And that'll be early mid-January when the TSX approves this transaction, and we'll come out of the gate as, I believe, the leading public graphite company.
Well, thank you, Greg. You know, great overview, and I think anything else to add at this point, Greg?
No, that's good for now.
Okay, before I turn it over to our next panelist, which is Tim Moody, I meant to also mention earlier that one of the things that it also got us thinking about doing this call was, you know, we're quite involved with another company called Orezone Gold, and they recently did a call called Festivus with the Rest of Us, which was quite fun, and Patrick Downey and his team were the ones that and I think we're going to see more of these great panels. I mean, it's a great way to communicate with a large number of people, and we can all do it in the comfort of our homes. And so anyway, wanted to give a little bit of a shout out to the Orezone crew that I put together Festivus for the Rest of Us. And, you know, we're not talking about gold today, but we do like that story. And so with that, I'll turn it over to Mr. Tim Moody, all the way from Europe.
Yeah, thanks, Sherman, and hello, everyone. So just a little bit of an introduction to Pan Global, and for those who are not familiar with the company, and so I'll give a little bit of a description of what we're doing, and then I'll dive into copper and particularly the battery metal aspect of it, and why I think that makes Pan Global a pretty interesting investment opportunity. So I think, firstly, Pan Global, we're listed in the Ventures Exchange in Canada. Our main project is in southern Spain, in the Iberian Pirate Belt. We're primarily looking for copper, but we have some interesting tin and other metals as well with our new discovery. So, I think I should just add a little context to begin with. Firstly, in terms of copper, adding new copper mines globally seems to be becoming more and more challenging. The mines are becoming smaller. And the big ones are taking longer to get into production. Typically, 10 to 20 years for a big porphyry discovery. They're going deeper. Head grades across the industry are declining. And many have other challenges with its location or geography or whatever, metallurgical aspects. So near surface copper discoveries are pretty rare, and finding copper ore bodies in good locations is equally uncommon these days. So, and also copper, as far as a metal goes, as hopefully you'll hear a bit more about in a moment, is high copper prices, well, firstly, it's a very important metal for the energy transition that we're seeing, but also I think with what's going on in the world at the moment, higher copper prices are potentially sustainable for quite a while, particularly around because of the need to reduce carbon emissions and the growth in electric vehicles, etc. in particular. So I think, why I think Pan Global is a good investment prospect is that, I think we're well placed to jump the queue and new copper project into production. We're currently focused on one particular target called the La Romana target in our Escacena project area. It's the first target that we've tested. We've got a bunch of others that we're about to start exploring as well. But our first drill holes in that target were discovery holes. We're now on hole number 113, and the mineralisation is still open in various directions. We've got copper mineralisation in every drill hole over about 1.3 kilometres of strike so far, down about 300 metres down dip as well. So it's a pretty interesting project. The geometry, it's copper, some high grades from surface. It's 20 to plus 50 metres thickness in some areas. The mineralogy is very simple, and so it looks like a very good prospect for an open pit mine with very low deleterious minerals, metals, etc. So we're off to a pretty good start. And as I say, we've got lots of upside. This area we've been drilling, it's clearly going to grow, and we've got an excellent prospect of making additional discoveries on the ground nearby that we currently hold. So a little bit about sort of copper. Well, I think I share Greg's view that we're heading for pretty extraordinary times. I think I'm personally very bullish on copper. We're potentially entering a new sort of copper cycle, and what I think will be a sustained period of high prices. Following on from the last wave of I guess high metal prices driven largely by China. So what's behind the new demand for copper at the moment, and what's driving this sort of what seems to be a lowering of copper inventories year on year over the last few years? Well, the backbone to that is the population growth, which is always there, the improving standards of living, better housing, but in particular more cars and more infrastructure associated with the change of energy requirements. But the three things that I think are really driving metal demand, the copper demand in particular, is these sort of very aggressive carbon emission targets that are being announced around the world, which is driving sort of alternative energy, new infrastructure that's going to be new technologies, etc., and in particular changes to transportation. So the change to battery and hybrid electric cars and the new infrastructure that's going to be required to support that is quite substantial. There's what you can see. There's 4 times as much copper in a battery-powered car compared to a standard internal combustion engine motor vehicle. So, but then, and most of that metal, most of that copper is sitting in the batteries. But anyway, so the other things that are sitting behind the potentially sustainable high copper prices is that there's been a sort of stagnation in capital expenditure on new mine developments, new copper mine developments, and add to that there's some sort of current geopolitical risk in some of the most important areas where copper is being produced, and you can see a couple of the major copper producing countries, Chile and Peru, which have got changes of government at the moment, which is associated with some additional uncertainty. So I guess a few sort of bigger picture figures. There's forecast that the world's going to need at least 20% more copper by 2035 than what it currently uses. And some estimates that we're going to need at least, or perhaps as much as double the amount of copper we currently use per year by 2050. So that's a substantial amount of copper. It's a very big change. So there's currently a scramble really to develop the infrastructure that's associated with this transition to a lower emission environment, and in particular the transport industry. And I saw one quote the other day, there's a sort of mismatch between climate ambition and minerals availability, and that's particularly the case with copper, I think. And I think that problem is going to continue to grow. And most of this new copper that's going to be required is going to have to come from new mines. So that's a pretty big ask, given that the world's depleting copper resources currently at a rate of more than 3 world-class copper mines per year. So yeah, we're going to have to find a lot of copper to meet this sort of growing demand. So transportation is really the metal that people are saying is disrupting demand and where the change is fastest. Transportation accounts for about 20 to 30% of global emissions currently, and 70% of that is from road transport, and about half of that again is from cars and buses. So big heavy trucks being the next big contributor. So, and much of the copper that's going to be required is in the batteries for these cars, but also with the infrastructure that's going to be required to but not only supply energy for the growing electric vehicle industry, but also for the delivery of the energy to charging stations, etc. I think just a few interesting stats. I didn't quite realise just how many cars there were in the world, but there's 1.4 billion cars on the road currently, but only 10 million electric cars. So there's a very big gap in terms of or opportunity, let's say, for electric vehicles. I think there's about 10% of the current new car market is electric vehicles. Sorry, 3%. But that's, I think, to meet the emissions, some of the emissions targets, people think that you're going to need probably electric vehicles to represent about 30% of the new car market by 2030, perhaps 50% by 2040. So that would, by 2040, that would represent about over 50 million electric vehicles. So that in copper terms, that's another 4 million tonnes, 4 to 7 million tonnes of additional copper that you wouldn't that you need just because they're electric vehicles versus standard combustion engine vehicles. Yeah, what else? So I think there's some.
I'm just looking. Yeah, thanks.
Sorry, there's some forecasts saying that there's probably the electric vehicle about 10 times more copper than by 2040 than it currently needs. So I think there's no other no viable substitute for copper, and it's pretty just looking at the electric vehicle industry alone, you can see that yeah, we're going to need a hell of a lot more copper to be found to meet the demand, meet these new environmental or emissions targets that are out there. So anyway, so I think given that we've got a new copper discovery in Spain, it's a good location, we've got a good infrastructure around us. It's an area you can permit new mines fairly quickly. I think we're in a very, very good position here to, as I said earlier, sort of jump the queue in terms of getting another mine into production. But further to that, I think we're going into a market where
Look at the $100.
we have higher copper prices for quite a long time ahead. All right, I'll leave it there, Sherman.
Well, thanks, Tim. Yeah, a couple of quick things that come to mind. I mean, you know, I didn't mention earlier that you know, when we're looking at individual security selection, we can't emphasize enough. You know, we're looking for great projects, great people, and companies that are available at the right price. So it's great to be going through kind of the macro look, and then you get down to, okay, we want to own battery metals, and then what individual company do we want to pick? And I think that's the process that we all need to do, and then, you know, vend that into our overall portfolio strategy. And, you know, I think it's great to hear from each individual company. And with that, you know, another, you know, exciting story in the tin space is Cornish Metals. And with that, I'll turn it over to Richard Williams, and then we'll get into some more question and answer.
Thanks, Sherman. As Sherman mentioned, I'm Richard Williams. I'm the CEO of Cornish Metals. We are dual listed. We listed in Canada on the TSXV and also in the UK on the AIM exchange under the symbol CUSN, copper tin. We listed in London earlier this year in February. Our projects are really an exploration project, new discovery in Cornwall called United Downs, which has potential for high-grade copper plus tin plus silver in an area that's had a lot of historic mining previously. And we've also got the former tin producing mine called South Crofty, which is fully permitted. And that's obviously a commodity that is very much of interest today. And I'm going to talk about tin in particular here. And I thought probably the best way to approach this is to talk about the traditional uses, where the current uses are coming from, what the growth perspective looks like. Because I think for a lot of people, it's a surprise to see the price performance of tin through this year. And I think to come back to the way Sherman introduced the seminar this morning, tin is not just an important element maybe when it comes to battery technology, but I think it's more of a technology metal. And it's referred to as the glue in electronics. And I think it's essential to this whole new global drive towards achieving net zero and carbon footprints, electrification of economies, because anything with an electrical connection has tin in it. So traditionally, up until about 20 years ago, the main uses of tin were in things like chemicals, alloys, bronze, for instance, tin plating, glass floating, and as a stabilizer in PVC, as well as a use in solder. And then about 20 years ago, the EU passed legislation to outlaw the use of lead in solder, and that saw a dramatic increase over the last 20 years in the use of tin solders, to the point where over the last 20 years, global demand for tin has increased from about 200,000 tons per year to its current levels of around 370, 380,000 tons per year. And that's really driven by the growth in electronic applications, anything from iPhones, iPads, computers, anything with electric circuitry inside it. And what we are seeing is current growth projections in the order of 2 to 4% per year going forward. The International Tin Association, which is based in the UK and comprises the full spectrum of participants in the tin world, ranging from explorers, developers, producers, through smelters, metal recyclers, end users, and research and development. They talk about us being at the start of a technology super cycle. And there was a publication made a few years ago, a research project out of MIT in the US, which was then republished by Rio Tinto, which looked at new technologies like robotics, the Internet of Things, computing, renewable power, power generation, solar power generation. And they looked at which elements and which metals were used in those sectors, and consequently which metals would be most impacted by growth in those areas and adoption of some of these new technologies. And to the surprise, I think, of a lot of people in the market, tin came out at the top of the list. And there's a number of reasons for that. As I said, tin is widespread in everything. You don't see a lot of tin in each electronic appliance, but there are billions of appliances. And as we move forward and everybody wants to start working more from home, you want better connectivity. The number of applications through the adoption of the Internet of Things is growing exponentially. And so that this demand for growth, if you can look at the tin supplies on the LME and the Shanghai stock metals exchanges over the last few years, you've seen a dramatic drawdown of metal stocks. And this year, the consequential increase in the price rise for tin from about, well, when we first acquired the Cornish assets, the tin price was around $13,000 a ton. Today, this year, it touched $40,000 a ton. And really what we haven't seen, which we did see historically, was new tin coming into the market from warehouses and stockpiles elsewhere. We've seen those stockpiles drawn down to the point that we're at record low levels of tin inventory. But tin is essential for all of these very ambitious aspirations that different governments around the world have for moving towards achieving net zero. So one of the things that I think has really become more relevant to the world economy going forward, and certainly governments around the world, is this whole concept of strategic supply, domestic supply, security of supply. And when we look at the tin market as it is today, out of the 370,000 tons of consumption demand that we have, about 75% of that is primary mine production of tin. The other 25% is recycling. So tin is one of the most recycled metals already. And when you look at the primary mine production, about 75% of that comes out of Southeast Asia, principally China, Myanmar, and Indonesia. And so from a Western world perspective, there's no domestic tin production in North America. There's no primary tin production in Europe. There is some secondary byproduct production of tin from some of the tungsten mines in Portugal and Spain. So in the US, tin is classed as a critical mineral. In the EU and the UK, I think there's recognition now of the importance of tin from a strategic perspective. If we are to achieve a lot of these domestic industrial manufacturing ambitions that people want to get to, I think it's really important to have your own domestic supply of these metals. So I think that's the opportunity that faces ourselves as a company, Cornish Metals. You know, I think a lot of people have forgotten that Cornwall in the UK is one of the world's great kind of tin districts. And prior to that, it was a widespread copper mining region. Over the last 500 years, there's been something like 2,000 plus documented mines in Cornwall. Our South Crofty project was a copper mine which had first recorded production in 1592 and was a copper producer right up until about 1905. And then it transitioned to become a tin mine and operated as a tin mine from 1905 till 1998 when the tin price led to its closure. So just talk a little bit, about the South Crofty project. This is the highest grade tin resource globally that I'm aware of that's not in production. We published an updated resource this year which showed 1 million tons indicated, 2 million tons inferred at a tin grade of around 1.6% tin, which ranks it at a similar grade as the Renison Bell mine in Tasmania. From a tin price perspective, even when the tin price collapsed in 1985, South Crofty was one of the few hard rock tin mines that managed to keep operating for another 13 years, which is testament to the high grade nature of the project. So what we have as a company is a mine that operated for a long time. So a lot of the risk aspects that you would associate with a new mine are really not there. We understand the geology, we understand the metallurgical process to maximize recovery of tin. We know it's high grade, we know what the ground conditions are like, and we've got a mine permit that's valid for another 50 years. We have planning permission to build a new process plant. And more importantly, we have very strong community support to see the mine go back into production. And I think that really gets us into the whole ESG aspect of developing new projects. I think it's all well and good that we're all sitting here with these big aspirations for achieving certain milestones on renewable power, solar panel power generation, wind turbine generation. But I think the reality is, to achieve them, we need mining. And I think it's the Bank of America came out with some research recently that looked at the mining sector as a whole and looked at the projections going forward for the requirements of everything, you know, copper, graphite, tin, you name it. And, you know, their view is that we need to double the capital expenditures in the mining industry to achieve the production levels that we need to meet these targets. And I think mining companies are slow to get into that part of increase in the capital expenditures. But one of the issues facing the industry as a whole is permit risk. It takes a long time to actually permit mines in some jurisdictions. And I think that's one of the aspects that maybe sets South Crofty apart from a lot of other projects, is we've already got the permit and we've got the social license to operate. So we'll be looking to move that forward if we can, as soon as possible. But these are issues that face the whole mining sector. Is, you know, how do we address that, and where can we go, you know, within the Western world, so that we have that security of supply and we're not at the mercy of, say, all the production and refining capacity that China has built up over the last 20 years. You know, we've seen it where big new projects are discovered, and the next thing, a Chinese company has bought it, and they are secure in supply for China. And what we as regions around the world need to do is to look at that and say, well, we need our own supply. We need domestic production. We need to identify what we have in Canada, what we have in the UK, what we have in Europe, and we need to make sure that the government policies are in place that we can actually achieve these ambitions. So I think that's, you know, I think that's a good overview of where the tin space is. It really is a technology metal. It's ubiquitous throughout the electronics world. Actually, there's one point I was going to make. One of the new growth areas in tin is in a product that's called solar ribbon. And this is all from the International Tin Association. In about 2017, they estimate that solar ribbon accounted for about 1,000 tons of tin consumption. And what solar ribbon is really a copper wire that's got a tin coating on the outside of it, and it's used on solar panels for conducting electricity that's generated from the solar panels. They estimated last year tin consumption in the production of solar ribbon had increased to somewhere between 10 and 15,000 tons of tin per year. And that growth is expected to continue on that trajectory over the next few years, because you look at some of the initiatives that the US government's announcing, that the Chinese government's announcing for the development of solar panel farms that are generating electricity, and it is massive. And so, you know, the demand for tin is going to continue to grow, and what we face as a tin sector is really a lack of investment over the last 30 years into looking for new projects. The existing mines are all seeing depletion in grades, depletion in resources. So there's real concern from some of the big tin producing areas of how they're going to redress that balance. So I think looking at areas like Cornwall and you know, as Tim mentioned, they've got a tin association in some of the projects in Spain. That's where the opportunity lies. So that's my bit on tin, and quite happy now to answer some questions.
Great, thanks so much, Richard. I think, you know, I'm not sure how everybody else feels. I think you three gentlemen are slowly getting the hand to wallet reflex working. You know, I guess a couple of the questions that have come through and the panelists have been answering them do relate, and I guess I'll bring it back to the panelists, and I think we'll start with Richard, just because we're going to go in reverse order, and then we'll get Tim to answer the question, and then we're going to get Greg to answer the question, because one of this questions was actually directed first to Northern Graphite, and then Tim can also kind of wrap it up for us as well. And I guess it goes to the supply issue is something that seems to really be coming up from time and time again. And I think it was maybe Brock, or I can't remember who I was talking to, and they said it's like trying to put Hoover Dam through a garden hose. And, you know, how are companies going to reach this supply? And I think Greg answered one of the questions, saying that the raw supply is going to restrict the actual EV growth. So if we can't build these things fast enough, you know, how in the world do we build these electric cars? So with that, and another question was put to Tim, was how long is it going to be to build this mine? And, you know, maybe that's part of the answer is some of the jurisdictions that are, you know, more mining districts, mining friendly, you know, should we be considering that? And he gave an example that there was a discovery by Trafigura, I believe it was, on an ore body that was a greenfield discovery in 2012, and it was put into production by 2015. And I mean, we saw a wonderful example here in British Columbia, you know, the massive floods that took out the Coquihalla, and they rebuilt the thing in less than a month. You know, so with that, maybe I'll turn it back over to Richard, then to Tim, then to Greg to kind of bring us to a conclusion on you know, how significant is that supply problem, and do you think we'll actually see a restriction in EV growth?
Well, it's a really interesting situation that we face. I think when you know, if I'll come back to the tin market, and if you look at the last 50 years, you've seen average growth in demand of around 2% a year. You know, 2% of 370,000 tons of tin consumption, that's over 7,000 tons of tin. You know, for example, South Crofty, if it gets into production, would produce about 4,500 tons of tin. And we'd need one of those to come on stream every year to meet that demand. So that's a real issue facing the tin sector in particular. I think where the industry will most likely change, and we've seen some of this already, is some of the end users, like a car manufacturer. You know, we've seen Volkswagen, Toyota, Tesla, for instance, or electronics companies. And I'm just going to throw out names. I don't know this is going to happen, but you know, you look at a Google or an Apple, and at some point, these companies are going to want to ensure that they have the supply of the metals and the materials that they need to manufacture their products. And I can certainly see opportunities for those end users to come in and start financing companies like ourselves to develop the projects. And you know, you have a long-term then commitment to supply the materials that these end users need. And I think there's a bigger picture there as well. You know, we touched on the ESG aspect of things, and again, from a tin perspective, you want to ensure that the products you are using in your appliances are responsibly mined. You want to ensure that there's no large-scale environmental impact. And you know, you can look at things like Indonesia today. A large proportion of the tin production in Indonesia comes from offshore dredging, which has a big impact on the seafloor, big impact on fisheries, a big impact on reef systems. Or you look at Myanmar, which is another big tin producer, and you've got conflict going on there. You know, do you really want to be buying tin from an area where the proceeds are going to fund conflict? And so I think that there are so many moving parts right now that if you've got a good project in a good jurisdiction, and you can tick all of the ESG aspects, which obviously from an investment perspective are becoming much more prominent themes and considerations for investors, that's where the opportunity lies. So I think you're looking at financing from end users, and you're looking at potentially, you know, governments becoming more and more active as they recognize the importance of securing these supplies, to put in place policies that support the development of new projects, albeit very responsibly, and working with all the stakeholders involved, local community, local councils, and you know, you tick all of the boxes from an ESG aspect.
That's great. Thanks, Richard. Yeah, it just reminds me that we'll push on to Tim's answer right away here. Again, it was on another call I was on where there was an example of an actual customer asking for green aluminum. In other words, that particular, I can't remember if it was Samsung or Tesla, but they specifically wanted, you know, aluminum from a particular project, because then they can use that, I guess, in their overall marketing. And that's something that you know, Richard and I have been talking about for quite a few years, or ever since we've been involved with that tin project, is that green tin part. So yeah, we'll push over to Tim to.
Unmute myself. Look, I think a bit like the tin story, but perhaps on perhaps a bigger, much bigger scale, is the demand for copper to meet just the car market, the growing electric vehicle car market. Just that on its own is substantial. For every electric car, you're going to need 10 times more copper than you would need for an ordinary car. And that's not just what's in the car itself, but it's all the infrastructure that goes with it. So I think by 2030, you're going to need sort of, I forgot what the figure was, 250% more battery stations, charging stations for electric cars, for example. That's just one component of it. Then you need all the cables that are going to supply those charging stations as well. So copper being a sort of a major commodity, it's not so easy to double the current production, which is what's going to be expected to help meet these emissions targets that are out there. So you're going from 25 million tonnes of copper metal per annum to potentially 50 million tonnes by 2040 or so. That's enormous. When you consider also that the world is currently depleting what is equivalent in resources of 3 world-class copper mines a year. So then if you double the demand, where is all this copper coming from?
Yeah.
So and it has to be, the majority of that has to be supplied by new copper mines. As the proportion of, although copper is infinitely recyclable, it's only a small portion of the story in terms of filling that demand. So I think that's why copper is in a very sort of interesting situation at the moment. There's this scramble really to, I guess, keep up with, so just the electric vehicles. So people wanting more electric cars, different cities and so on are mandating that you switch over to electric vehicles or you stop using diesel cars or whatever. But there needs to be an infrastructure to support that. So I think that's every element of that value chain requires quite a lot of copper. And then add to that, there's the alternative energy. So we're shifting away from fossil fuels to solar and wind, etc. Again, wind turbines require lots of copper, and the cables that and so on that feed them need lots and lots of copper. I forgot what, there were some figures I saw the other day, 50 kilos per metre of cable for submarine, for offshore wind farms. Well, that's a huge amount of copper when you think about the amount of wind turbines that are going to be sort of required across the globe. So anyway, so I think there's a huge sustainable sort of requirement, a strong demand for copper as the world tries to meet these new aggressive emissions targets that are being set. There's just it's very difficult to see how that cannot but increase
the price,
the prices for copper, which means anyone with a good copper project in a good location that can be put into production soon is really ahead of the curve. It's all well and good finding a big copper mine that's at sort of a kilometre depth or something, but that copper may not see the light of day for another 10 or 20 years.
Okay, yeah, very good thoughts, and it reminds me of we've been always attendees at the Metal Investor Forum, a really good thing put together by Eric Coffin, and I might also add for those individual investors out there. If you're sort of going it alone and you don't work with a full service broker, make sure you consider really good newsletter writers like Eric Coffin, for example. Anyway, one of Eric's quotes at the last event was people are no longer asking him should they look at. it's what should I buy? So I think there is a sense of urgency, not only, obviously the bigger macro building of mines, but also, investors that do want to be positioned in the right names and the right sectors, the right companies. And so with that, I'm gonna pass over for final comments and to help us wrap up the call is Greg Bose from Northern Graphite, whose project, obviously, one of their flagship projects is in Ontario. And of course, he's doing a major transaction that transforms the whole company. But, with that, I'll turn it over to Greg. He's got some great views on to finish up.
Thanks, Sherman. Yes, there's a very large disconnect between the automobile manufacturers and sitting in their offices putting out sales projections on EVs. And it's not just sales projections, it's multi-billion-dollar investments they are making to retool and develop the capacity to produce a lot more electric vehicles. And I've talked to a few of them, as you might imagine. And one of them, I said, based on you need 300 gigawatt hours of battery manufacturing capacity by 2025. That means you need a 40% increase in world natural graphite production just for you, not everybody else, not the Chinese, just for you. So what's your plan? And the answer was, well, we're working on it, which is kind of absolutely staggering when you think about it, that you would be committing billions and billions of dollars and not have a strategy for where the raw material is going to come from. We can't build mines fast enough. If you look at the case of graphite, a few years ago, the market was 650,000 tons a year, and maybe battery demand was 50. Now the market is 1 million tons a year, and 500,000 tons a year. 500,000 tons of that is now batteries, and it grew by 20% last year. So 20% of 500,000 tons is 100,000 tons, obviously. That is a big new graphite mine every year, and none are under construction. And in the West, in Canada, there's 3 or 4 big projects. There are a number in Africa, but the time to permit a project and build a project is substantial. You don't just turn the switch overnight. So, in my view, the expansion of the battery minerals production capacity is going to restrict the EV market. And if the automakers want it to happen faster, they better show up quickly with very large checks.
Well, there's thanks a lot, Greg, for some closing comments. And we're at 10:52, so I think it's a great time to thank everybody for joining us, and all of us at Pan Global and Northern Graphite and Cornish Metals. We all wish everybody wonderful, happy holidays. And if we've been able to build a little bit more awareness and knowledge on the space and these individual companies, then we've helped the companies tell their story, and we've helped investors learn a little bit more, and that's good for everybody. I'll close with one final quote, and it came from Tim, because on one of the questions, and I totally concur, is that oops, no, I'm not reading that right question. Tim answered the question is, will junior miners be able to build upon the need and supply demand? And this was from Oren Peter, I think, asked the question. And Tim said, I think it's a very good time for junior exploration and mining companies with good projects containing those metals that are required to help meet emission targets, but face supply challenges, whether it's copper, tin, or graphite. So what a great answer to a great question. And now you've got an introduction to 3 great companies, and we hope to do another similar webinar in the near future. And I think we've achieved all the goals of the Triple Crown webinar. So thanks everybody, panelists. Great big thank you to Greg, Tim, and Richard, and Natasha for helping organize all this.
Chairman, could I make a small suggestion here?
Sure.
There's still some questions here which have not been answered. So anybody that has to move on to something else can do so. But if you want to just leave the webinar open, and any of us that can stick around and just answer the questions as they come in, I'm happy to do that. Or answer the ones that are here now. Just type in the answers so everybody that wants to stick around can see them.
Sure. Yeah, so we can, somewhat officially end the call, but let's all stay on. The panelists that can stay with us, that'd be great. It's a great chance to answer some more questions.
Greg,
right.
I see there's a question. I might just stay for a little bit. There's a question there about what percentage of future demands for tin, copper, graphite will come from recycling or reclamation. I can answer that for copper. I'm not sure about the other metals, but copper is, it's 100% recyclable. But a lot of copper is in use for decades. So I think currently, or at least in 2020, thereabouts, about 20% of the total sort of copper that's being used each year is coming from recycled copper, and that's mainly for metal alloys and so on. But the biggest demand for copper is in copper wire and copper cable, etc. And that is all being supplied from new copper mines. And it's that, but with this doubling of copper demand over the next sort of 20, 30 years, then the proportion of recycled copper in that total copper picture is going to decrease in terms of recycled material, copper coming from recycled material. So it's, in other words, as I said, there's this scramble at the moment to try and put in the infrastructure and meet these emission targets. Recycled material is going to play a decreasing role in the copper space.
If I can just add to that on the tin side, as I mentioned earlier, about 25% of all of the supply of tin comes from tin recycling. So it's already a very highly recycled metal. But what we've seen over the last 10, 15 years, certainly from the electronics industry, is this whole process of miniaturization, trying to use less and less material. But at the same time, you've had this enormous growth in the number of appliances. So even though you're using less tin per little electrical connection, there are lots more connections out there. And I think you've got to the point now through miniaturization that they're using nano powders, tin paste, and they can't reduce the amount of tin any further. And kind of the double-edged sword of that is that there's such a small quantity of tin in each electronic application that it gets lost to the whole recycling thing. It's not worth recycling. So that's one of the aspects of recycling. So currently it's around 25%, but I think over time that may reduce.
Yeah, with respect to graphite, there is almost no recycling of graphite. I guess, unfortunately, might be one way of putting it. The applications that it's used for are very intensive, and at the end, that's pretty well the end. And when you talk about recycling batteries, everybody focuses on nickel, copper, cobalt, which I'll call the higher value components of the battery, and there's not much attention paid to graphite. The good news is that graphite is a very benign substance. It's basically pencil lead, so it's not toxic and it's not a carcinogen.
Thanks, Greg. There's also a question. I'll grab this one. Everyone needs money for their project. What will determine who gets that money? It's a great question. I mean, companies that are in the junior exploration business, we often raise money through financing, secondary financings, IPOs, and quite often through private placements. So, what determined who gets that money? Well, I mean, ultimately the investors do, I guess. And right now I can tell you there's extremely strong demand for well-structured you know, with the right projects, the right people, and the right prices. So usually it's done through private placements at companies like Pan Global and Northern Graphite and Cornish Metals. You know, as we sit today, Cornish or Tim Moody and Pan Global are probably sitting just under 20 million of cash and probably not requiring financing. Whereas Northern Graphite's in the middle of doing a significant financing, which, you know, will be very hard to get. So the answer is probably more like who's fortunate enough to be able to participate. You know, it is open to the public. So we do raise money through private placements from time to time in junior exploration. And also with Cornish Metals, I mean, they've got a lot on the go and a huge amount of demand from investors out of the UK. So usually what will determine who gets that money is the market. You know, and we know that in the short term, the market's a bit like a voting machine and anything can happen. But in the long term, you know, we find that it's a weighing machine, and the companies that like Cornish, Pan Global, and you know, Northern Graphite tend to attract very, very strong institutional along with very strong retail investors. So I think it's going to be tougher and tougher to get into these placements. And I'm not sure if anybody else has anything to add, but that was the one question I thought I would grab.
Well, I would just add that the people that decide who gets the money are the people that are writing the checks. So quite obviously, you know, I think we need to see a lot more participation by the big battery manufacturers and the automobile manufacturers. They tend to stay away from vertically integrating all the way down to raw materials. But given the size of the challenge that they have, I'm not sure they have all that much choice. Excuse me. In terms of the market, you know, a lot of it that is driven by the price of the commodity, which creates excitement or does not create excitement. So lithium is a very good example where everybody saw the tsunami of electric vehicle demand coming and nobody did anything in terms of strategic offtake agreements and investments. And then back around 2015, the price spiked and a number of mines got built, and then too many for the short term. So the price went back down, demand continued to rise. And now lithium is spiking again for the second time and more mines will get built. And, you know, it really takes that price rise to create a sense of urgency and generate the returns that people need to put their money into these projects. And that's just starting to happen with graphite.
Also a question up there, guys, on with regards to South Crofty and Cornish Metals' strong market cap, can this be leveraged to bring production forward? You know, I guess I've been fortunate to, I've visited both the South Crofty site personally and also the Iberian Pyrite Belt with Tim Moody in Spain. I'm hoping to come out to Ottawa. I'm going to wait for the summer though, Greg, before I visit the.
You have to come right after the snow melts and before the black flies come out. You've got a short window there.
Perfect. So yeah, all these areas are quite interesting in terms of jurisdictions, but maybe Richard, if you want to grab that South Crofty.
Yeah, look, you know, I think when we listed on AIM earlier this year, the focus for the company was the United Downs copper tin discovery. And, you know, our position at that point was we would look at how to get South Crofty going when the tin price was more supportive. And I think, you know, what you've seen through this year with the tin price going from $20,000 at the start of the year to up around $38,000, $40,000 now, it's really happened a lot quicker than I think anybody anticipated. So yeah, it's created an opportunity for us to look at accelerating the program at South Crofty. I can't say any more than that, but you know, clearly the opportunity is there right now.
Yeah, great. Okay. Well, thanks, gentlemen. I don't see any other questions. I think it's just after 11 o'clock, and I thank everybody for joining us, and I look forward to doing our next webinar.
Sure.
All right. Happy holidays. Merry Christmas to everybody.
Thanks.
Yeah,
All right.
thanks for organizing. All the best, everybody. Bye.